Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is July 30th, 2025, and we're diving into Kraft Heinz's second quarter earnings report. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Kraft Heinz has released their Q2 2025 results, and there's a lot to unpack, from sales figures to strategic initiatives. Let's get started.
Revenue and profitability overview. Let's start with the top line. Kraft Heinz reported net sales of $6.4 billion for Q2 2025, a 1.9% decrease from last year. John, what are the key factors behind this decline?
The decline in net sales is primarily due to a 2.0% drop in organic net sales. This was driven by a decrease in volume mix, particularly in North America and international developed markets, although emerging markets showed some growth. The gross profit margin also decreased by 100 basis points to 34.4%, reflecting higher input costs and a challenging market environment.
And how did this impact their profitability?
Adjusted operating income fell by 7.5% to $1.3 billion, mainly due to increased commodity cost inflation, which outweighed their efficiency initiatives. However, they did manage to offset some of these impacts with higher pricing and reduced selling, general, and administrative expenses.
EPS performance and analyst expectations. Moving on to earnings per share, Kraft Heinz reported an adjusted EPS of $1.69, which is above the forecasted 64 cents from 9 analysts. John, what does this tell us about their performance?
Despite the challenges, Kraft Heinz managed to beat analyst expectations with an adjusted EPS of 69 cents. However, it's important to note that this is still an 11.5% decline year over year. The beat was largely due to fewer shares outstanding and some operational efficiencies, but the overall decline reflects the pressures from higher taxes and lower operating income.
Cash flow and capital return. Let's talk about cash flow. Kraft Heinz reported a significant increase in net cash from operations and free cash flow. What are the details here, John?
Indeed, Kraft Heinz reported net cash from operations of $1.9 billion, a 12.6% increase, and free cash flow of $1.5 billion, up 28.5%. This improvement is primarily due to better working capital management and lower cash outflows for variable compensation. Additionally, they returned $1.4 billion to shareholders through dividends and share repurchases, highlighting their commitment to returning capital to investors.
Strategic initiatives and future outlook. Looking ahead, Kraft Heinz has mentioned strategic transactions and reaffirmed their 2025 outlook. Can you elaborate on these points?
Kraft Heinz is actively evaluating strategic transactions to unlock shareholder value, though no specific details have been disclosed yet. They remain focused on driving long-term profitable growth, leveraging their brand growth system and go-to-market model. For 2025, they reaffirmed their guidance, expecting organic net sales to decline between 1.5% and 3.5% and adjusted EPS to range from $2.51 to $2.67.
Key takeaways. In summary, Kraft Heinz faced some challenges this quarter with declining sales and profitability, but they managed to beat EPS expectations and improve cash flow. Their strategic focus on long-term growth and shareholder returns remains strong. Thank you for joining us, John.
Thank you for having me. It's been a pleasure discussing Kraft Heinz's performance.
Thank you for watching Smart Stock Watch. Don't forget to like, share, and subscribe for more financial insights. We'd love to hear your thoughts on Kraft Heinz's performance in the comments below. Until next time.